Welcome back to the Gold Newsletter YouTube channel. Welcome back to New Orleans, and I'm joined by Glenn Jessome. Glenn, it's great to see you. You're the CEO of Silver Tiger Metals. It's good to see you in person.
Kai, it's real nice. Been a couple of years, and just great to chat with you about the Tiger. It's going to be fun.
Absolutely, yeah. Why don't we just jump right in? Give us a quick 30-second overview of the
Well, look,
company.
our group has been in Mexico for 30 years. We've built 3 mines and sold 2 more to majors. This is just the next one we're going to build. Beautiful asset, had to have it. I'm a securities lawyer by training. I think some people may or may not know that. But really, we saw a company back 7-8 years ago that when we saw the asset they had, that they'd moved down the field a little bit, didn't have a lot of experience in Mexico. We had to have it. We went and got it and just got to work on it. Purchased the asset, really purchased the public company, delisted it, took the asset, and let's go. So call it, since we've had it, I've raised $91 million. 75 million of that in all bought deal financings in the last 3 years. Our major shareholders, I think people should know that, are Franklin Templeton put most of that money in, Steve Land. We had Maria Smirnova from SAM put a chunk in. She'd be the second largest shareholder, I think. We've got Joe Foster, Van Eck is in there. Pete Melita's got a big holding in the company from Merck out in San Francisco. What I really like about that, and I think people need to know this is how you get to where we are now with just putting out a big resource update and a PEA on the project, pre-fees for several months away. We put about 63 million of that 91 million in the ground. Over the 8 years we've had it, total G&A was less than $8 million. It's all Canadian I'm talking. And I've still got 23 or 24 million left in the bank today to keep working. And look, it's a tough market out there. It's hard to get money. Last bought deal I did was in February. BMO led that one, and really nice to have the treasury filled up. One thing people should know is and I know it's a long intro, but it speaks to the quality of the asset. You know who our shareholders are. You know the money we've raised in a tough market at great valuation, all bought, no warrants, straight up commons. Is, most banks, if you have access to that, I think people should know we're covered by Sprott, we're covered by Desjardins, by Echelon, by 8, by Stifel. So there's a lot of information you can get out there on the asset if you can get access to some of that independent analyst coverage.
Let's start a bit with the track record, because I think it speaks a lot. It speaks volumes.
Yeah.
Run us through a bit of the history of yourself, but also the team you're working with.
So 25 years ago, the team, even before I was done my law training, went into Mexico, and they built the Ocampo mine, and they built the El Cubo mine. The company that had that went to a $2.2 billion market cap in the NYSE. Ocampo ended up being sold to Carlos Slim in the end. El Cubo, they ended up being sold to Endeavor Silver. Moved on to another deposit called Capital Gold, and that was a beautiful deposit. Got sold to, the Nairi deposit was sold to Capital Gold. Another project the team worked on was Santa Gratuitas, which ended up being sold to Agnico. And this technical team that I have the privilege of working with, and that did all of that, were the team that really identified this asset and said we had to have it. And you know why? There's no new discovery, Kai, in Mexico. It's either all old Spanish mines or old American mines in our experience. When we looked at this 7-8 years ago, this was the old El Tigre American mine. You imagine this, why we bought it. 20 years in production, 100-ton and 200-ton per day mill. People will know what that means, small, tiny. They took 100 million silver equivalent ounces out in 20 years at an average grade of 2.2 kilos. The cutoff was 1.2. We knew if we just got it, drilled under it, around it, north and south of it, it would go very well. It's gone very well.
How much, you put out a PA just this week, right? But before we talk about the PA numbers, I want to learn how much or what you've put into it to get to that point.
So $91 million, 62 million right in the ground. I told you that. 8 in G&A, 23, 24 of that left. And that's 125,000 meters of drilling. That is, everybody's saying, here's the resource estimate, here's the PEA. That's 7 or 8 years of work. That's all the engineering you have to do for the underground work, for the pit. So basically, that 125,000 meters plus all we've developed the underground. We're a half a kilometer underground in underground development. You can see some of that on the website. It's all on Verify on our website, silvertigermetals.com. You'll see some great work. So between the drilling, the exploration underground, everything that spits out after 6 or 7 years. And when we drilled our first hole it's to get to here. We released in September our MRE, mineral resource estimate, of 176 million silver equivalent ounces. About 80 of it in the open pit, 90 in the underground. What was really important also in that resource estimate that came out, most people don't check this, our independent geologists, technicians that did that for us, they always put a exploration target. Our exploration target is incredible. Just around the old mine, we've got another 75 million in exploration target. We just got to go drill that. And that's the beautiful, that gave that. But you know what? That's not worth anything. That's a piece of paper that says you got all these ounces. Guess what you can get with that? You're going to get a coffee. So then we do what we always do. How do you move it to economics, and then how do you build it? So that's really what the last 2 years to 18 months, get the resource estimate out. So what we did was we attacked the open pit portion. People should know this too. We're already permitted. Like when I bought that public company and delisted to get the asset, it came with an 800 ton per day underground permit, all approved. That means the cyanide was approved and the Merrill-Crowe was all approved for that. So parking that, we're in great shape there. We decided, and why we decided to go after the open pit first as far as the PEA, it's easier to build, but we hired a guy named Francisco Albalez. It's very important, and people should go check this, because when we made the decision, we're ready to go build now. Argonaut is a company you would have been very familiar with in Mexico. The guy who ran Argonaut for the last 12 years until he joined us this summer was a guy named Francisco Albalez. He built, permitted, and ran El Castillo for them. He built, permitted, and ran Patala for them. So we brought him over to build our mine. And he said, we need to immediately do the work. This is one of the best pits I've ever seen in Mexico. Let's get it done. And so then we released, this week, it was Monday or Tuesday, or I think it was Wednesday. It's all been a blur, the PEA, and it was extremely robust. I can talk a little bit about it if you want me to.
Please do, because it's the start of the development track.
Look, here's the way we looked at it. The development is the two parts. So think about 80 million silver equivalent ounces in the pit, 90 million already underground, done, drilled in the MRE, and 75 million more in exploration target. But we got to start somewhere, so let's start over here. We've been working on this for about 18 months. It's a beautiful, beautiful PEA called a 12-year mine life. The NAV was 287 million USD. The IRR was 56%. Incredible. Payback 1.7 years. But the magic of a pit is not only is it easy for us because we've done it at times in the past, but the capex. Look, I've been listening to people talk about $1 billion capexes here at this show, and I'm going, no. People can barely raise enough money. We're very lucky and fortunate to have been able to be very supported by the institutions. But the capex in this is 59 million. That's with a 7 million USD contingency, and that's very doable. I'm already working on the debt for that now. So the nice thing though is what we always try to do is build profitable mines. Don't move, Rob. This thing makes, over the 12-year mine life, 455 million USD. It's all in the numbers. People can go look at the press release that was online on the website. 455 million USD after tax over those 12 years. Payback 1.7, as I said. All-in sustaining is $11. Your capital, your costs on production per silver ounce is 10. This is a beautiful, beautiful project. Call it. You can go look at it's all on the website. But call it. Makes about $50 million a year. Pretty nice.
What are the
USD.
price assumptions you used in that?
We used $18.50 gold, and we used $23 silver. And if you look in the press release, we're always very transparent. So 23, all the sensitivities. I like to point people to the 30, 35 sensitivity, but that's not what the downside is. What you want. If you take this all the way back to $16, $17, 15, I think it is. This thing still has an IRR of 30%. Yeah. It's very, very, it's a robust project. But what that is, so timing is, we need to get that in production and get that cash flow, because underground development is very expensive. That open pit I'm not going to call it a world-class open pit. It's a very profitable open pit, maybe one of the most profitable in the world, but it's only 15,000 tons per day. There are 50, 60, 70, 100,000 ton per day open pit. But what it does is it's the engine that allows this to become the world-class asset, because it's what the old-timers did. It's underground. That's where the other 90 million is. That's where the 75 million exploration target is, and that's what we'll use this to go after.
Fantastic. You mentioned you're already in discussions for debt financing, but
so let me, I got it.
So point is, like, usually banks need a PFS or a minimum PFS. So like how do you get to the PFS stage?
Kai, you're way ahead of me. You should be running a mining company. You're thinking like us. So look, all the reports, the MRE in September and the PEA a couple of days ago, that's 2 years of work just to get the documents ready, 8 years of drilling to get it to there and to get it down the road. But the pre-fees we started probably 6 months ago. So on the mountain right now, if you go to that pit, okay, I'm going to talk about the pit. We want to move the pit right away to pre-feasibility. So we have 4 drill rigs turning on the mountain today. I got 22, 23 left in the bank. This is going to cost $6 million, and by April, is the cutting to the point, April, May, I'll release the pre-feasibility study with respect to this. Here's how it has to work. 4 drill rigs are on the mountain right now. All Golder have been on the mountain. They're going to do the pit design. So all of the metallurgical work is being done. Holes are done, finished. We're now drilling the geotechnical holes that Golder have recommended. Then those 4 drill rigs will do 2 things. The way the pit works, you need to understand this. It's about 2 kilometers, 250 deep, 53 million tons. 43 million is indicated, 11 is inferred. There's a starter pit in the middle of 5 million tons. Now, that pit is 78% recovery on the heap leach, which is incredible. Yep. It's 2-to-1 strip, and the grade is 0.61. That's high grade for a pit in Mexico. The beautiful part is that we have a starter pit in the middle, 5 million tons, the first 2 years. Strip is 0. Grade is 0.95. So that's really what we need to get at for the financing with this drilling, because we'll take that indicated, we'll prove the first 2 years of production to measured and indicated. That's what the bankers will want to see. So we should be able to do this on pre-fees. That's what we think, and we're already in discussions with the debt financiers. Second thing on that is we don't want to leave any ounces behind. So what we'll do then is that 11 million tons that's inferred right now in that pit, if we go to pre-fees, everybody knows we lose it. So we're going to bring that all up into indicated. And by April, it's going to be a beautiful pre-fees ready to go, and we'll make the plan to build. Fantastic.
One thing you need to do to build is amend the permit.
Yeah.
Or is that just for the underground part?
So what we need to do, and everybody's asking about it. I'm just going to tell you, we've had a lot of experience in Mexico. Yeah. There have been some untrue stories coming out of Mexico. There will be no more permits.
Situation there.
They're going to change the laws they changed in Mexico. We welcomed, because for real mining companies that pay their concession payments, that employ lots of people in Mexico that have built mines before, they were better. They didn't hurt us at all. Right now there's the back and forth. There's an election going on. It's not going to be over till June, and basically October there'll be a change of power, but we've always got every permit we've ever had, either drilling, production, and we expect we're going to again. But let me tell you the little interesting thing about this. If I was going for a new permit on the pit, I think it would be something I'd say, there's a lot, let's see what the election does. But we're not doing that. In July, Francisco came in, he's the expert, who permitted all those Argonaut assets. He said, here's how I want to do this. So in July, he submitted the application to amend. We have the 800 ton per day permit. We have the cyanide already approved for that. So let's amend that application so that we can use the current application to extend to the open pit. That's what's been done. I can only tell you, and from how I see it progressing, that I'm very confident that I don't need it now. I need it in April, May, okay? Yeah. That by the time that time frame goes by, I think we have a very good shot of getting that amendment done. And then this is, look, I'm not going to say it's a simple build, but Francisco has, I asked the team how long to build it, and they said 9 months. And I said, come on. And I said, so let's say 12. But we become overnight, and the re-rating will happen different ways, and I want to talk about that. We become overnight the next silver producing company. And you can count on one hand the good assets that produce silver that make money. I'm not going to say who they are, but people know, and we will be added to that list, and we're very excited about it. Look,
Let's talk about that re-rating aspect.
So the re-rating, that's the important part. Here, look, drill holes, 8 years of 125,000 meters. We drilled some of the best holes at El Tigre we've ever drilled in our life. Wide zones. We have unlimited quartz veins like the old timers mined, a la a company like Silvercrest. We found a shale horizon. We'll get into that deep dive, which was wide zones of mineralization. We found a sulfide zone we didn't expect. All incredible things. We've got the wide stockwork at surface for that. But every drill hole was for a purpose. And it wasn't to excite people and to make people, I'm sure people buy and sell on that, but everything we do is so that we can show the institutional investor that we attract that, yes, they've got it, because they gave us $91 million. They must have thought we had it, especially 75 in the last 3 years, all bought, no warrants. That being said, how we re-rate. We changed Wednesday. We will always be an exploration company. This is a district. We drilled 3 kilometers. It goes for 25. We're just drilling around the old mine. We'll get to that. That's what the pit will help fund. But it's not on, oh, he's got the next drill hole. Now we have a NAV of 400 million Canadian just on the pit. I will gravitate to trading at 0.3 of that, even in a bad market. It's not going to happen overnight, but a 0.3 from where I'm trading right now on a exploration profile is a 2.5 times from where my stock is right now. When I get the permit and we have lined up the debt, which will be the next big news at or before pre-feasibility study is not going to change much because we know it's going to be good. Okay, so it's just more butter on the bread. That being said, then we start to trade to a 0.5, and just think about this number. When we put that in production, we should trade at a 0.9 or a 1 to NAV. The 400 million NAV, that's just on the pit. In time, the underground will far exceed that.
Fantastic.
So we know we've won. The market's going to figure that out. I think some smart people are starting to now. The nice thing is, PEA done, pre-fees by April, lots of money in the bank, over 20 million. It'll take us 6 of that to get finished. And then we're in exciting, the economics on this, if you look at them, I'm not saying nothing's easy, but the debt's going to be easy, and we're going to build it.
Fantastic.
We won.
Yeah.
Market will figure that out soon. We know we've won.
It's a perfect closing note. Fantastic. Clint, fantastic update. Thank you so much for coming on. Everybody else, thank you so much for tuning in. I think it was a fantastic update from Glenn here on Silver Tiger. We'll obviously feature the company more often.
We're coming back for an update.
Fantastic, because there are lots going on. Definitely talk very, very soon again. Make sure to follow this channel. Hit that like and subscribe button as well. Leave a comment. Do you think they'll get it done? I think so. Put it in the comments below. I want to hear from you. Thanks so much for tuning in. We'll be back with lots more here from New Orleans.